Hello, everyone, and welcome back to the main stage at Lending 3.0. We have a fantastic panel session coming up looking at people powered by personalization. Before I pass over to my panel to introduce themselves, I just wanted to say if you have any questions for them, please post them in the chat and we'll do our best to respond. But for now, we're going to be talking about tailored finance and finding your personal. How is lending responding to a society where those traditional notions of creditworthiness seem stale and outdated? And we've got a fantastic representation here to share some of their insight. I'd like to pass over to my panel to tell us a little bit about who they are and what they do. So can we please start with you, Rishi?
Hi, great to be here, and thanks for having me. I'm co-founder and CEO of Lendwise. We are the UK's only peer-to-peer lending platform that is dedicated to education finance, and specifically we focus on postgraduate education and professional qualification studies. We differ from a traditional bank in that we don't just look at a credit score, we look at a whole profile and thereby getting a holistic view of an individual and including future earnings potential, because our overall mission is to enable access to education. And what we appreciate is that good education can be expensive, and it usually comes with some very good outcomes in terms of better career prospects, salary, and so on. And as I say, our mission is to enable access to that. So if you've got the merit and the ability and the capability to study further, then not having all access to all of those the funds required to achieve enrollment shouldn't be an obstacle to undertaking that. So through our tech-driven enabled platform, we're able to provide a competitive, personalized financing solution in the form of a Lendwise loan. So in a nutshell, that's what we do, and we're growing fast.
Right. Thanks for that, Rishi. And I'm sure we'll be digging in a little bit deeper into some of the issues that you flagged there. Over to you, Martin, please.
Hi, everyone. Thanks very much for having me. I'm the CEO and co-founder at Tymit. We are the first installment-only credit card. And essentially what we do is we enable consumers to buy in installments anywhere in the world where Visa is accepted using our card in our mobile app. And really what we want to do is we want to empower people to be able to make smarter purchases, smarter decisions when they're buying, and provide really more transparency, more control than traditional credit cards that use what we believe are outdated revolving credit card models, where they ask people to buy something and then make minimum payments a couple months after. And people feel a bit out of control around those balances. So we aim to address that. We also aim to give more flexibility. Things like you can do in our platform is you can buy in up to 3 installments for free, no fees, no interest, if you need that flexibility, and then extend the period on individual purchases if you so need to. We are based in London. We offer our card to UK consumers only at the moment. We launched about a year ago, so we're a new company. It's early days, but we've seen impressive adoption of the model so far. It makes us really, really happy. More on the personal level, I used to be in management consulting before for about 10 years. Used to work for a firm called Bain & Company, advising some of the biggest credit card issuers in the world, mainly in the US, the likes of Citicards, Amex, Capital One, etc. And so I really had the time to go deep into customer experience and the credit card model, and I had a firsthand experience of how bad the credit card can become. And I was involved in a lot of research that very clearly showed that customers don't feel great when they use credit cards, particularly for borrowing. They feel out of control. They feel that it's a very expensive product. They feel that they owe more than they thought they would. They get charged with a bunch of fees, etc. So it becomes really, really bad products. And that's really a lot of what inspired me to quit my job, move from New York to London, and start the company 3 years ago to really address those pain points that people experience when they use credit cards.
Thanks for that overview, Martin. Oscar, can we go over to you now, please?
Sure. Hello, everyone. So my name is Oscar. I'm heading the lending operations at Rocker. And Rocker is a regulated payment institution based in Stockholm, Sweden. We launched in 2017. And what we're doing is to build a leading app for banking services to compete with the high street banks and basically win their retail customers in the long run. And we drive users by offering banking services that are easier to use, more affordable and smarter, without the strange terms, conditions, or hidden fees, of course. And we started off with loans, and lending has been like the core for us since the very beginning. And what we've tried to do is to push the limits for how much you can simplify loans and credit services for customers in an app. And over the time, we have proven that we have like a strong business model for lending, which I think has been an advantage for us. We can see that many neobanks and other peers that have started with other products have been struggling a bit when it comes to like integrating loans and credit at a later stage. So we started off with that and think we have a strong backbone in that sense. We're also looking into like the funding model as such, and I think we have a diversified and efficient one at the moment where we offer like third-party loans and credits through partners, and by that we can like significantly reduce the credit risk, of course. But today we've gone far beyond the lending, of course. So in addition to loans and credit products, we also offer debit cards, savings accounts, aggregation services, as well as personal finance management tools. And we're integrating like loans and credits as part of a much bigger offering. So some examples then of what we're doing. From the Rocker app, you keep track of everything you spend, manage all your money in one place. So what we're actually doing is that we are adding a layer on top of all your financial transactions, regardless of what bank or card they originally come from. We provide you basically one place where you can add like receipts to all the transactions, split them with friends, family, pay slower when needed, budgeting tools, and in order like the overall view and complete control of your financial situation. So that I believe is a really cool, and that top layer is something I'm really proud of and working hard on to improve. Should also say that we are in the middle of implementing all of these mobile payments methods. That is high on the agenda, of course. One more thing that I would like to highlight is we're taking the debit card a bit further and introducing also now in the year of this year with the fingerprint ID, meaning that our customers can forget about the PIN codes, they don't use them anymore. So I think we will be one of the first in the world to offer that, and we see a huge interest and a great feedback on that so far. One more key aspect of our business at Rocker is that we are trying to pioneer the peer-to-peer checkout services with like buy now, pay later services at Blocket. And for those of you who don't know, Blocket is the biggest peer-to-peer site in Sweden, and it's a really fast-growing business of ours. So keeping transactions between individuals, for example, when it comes to used cars, boats, and these times snowmobiles and whatnot. So keeping those processes efficient and safe. Currently, we're only operational in Sweden, but one of our main targets for 2021 is to launch our offering in more markets as well. So basically, to sum it up, what truly differs us from a lot of other neobank players is that we started off with loans and having built improved and strong lending model from the start, which gives us a strong backbone to expand further on, both when it comes to services and products, but also internationally. So I think that's an introduction to Rocker as such.
Thanks, Oscar. It sounds like you guys have a lot going on, and we'll be digging deeper into the lending aspect throughout the course of this discussion. And over to you, Chris, please.
Hi, everybody. Great to be here. Yeah, my name is Kneen. I'm a Senior Vice President here at Provenir. So I've been in the sort of financial services industry for about 20 years and really focused around empowering financial service organizations around data technology and analytics. Provenir itself is a financial technology business. We help some of the most innovative and financial services organizations really empower what we call risk decisioning and analytics. So basically, this is really about helping lenders and banks make real-time instant decisions, both at the point of application, so new customers to that organization, but also helping our customers manage the portfolios of customers, whether they be consumers or business owners, to make sure that they're dealing with them appropriately, that they're offering the right products at the right level throughout their lifetime with that particular organization. We're present throughout the globe. We've got about 80 plus customers using this technology today, and they range from large global banks through to, as I said earlier, some really innovative and disruptive financial service organizations focused on providing credit type solutions, whether that be cards, personal loans, secured funding, or various small business and commercial funding options as well. We deal with many different shapes and sizes of organizations as well. And what we're really proud of is that we've really helped drive really this digital innovation around making decisions within financial services. So helping organizations, consume as much data from many different sources that they want to, really empowering them to leverage complex analytics around data science and the advance of machine learning into financial services, so they can really make use of all the rich data that is out there, that is constantly evolving and new sources emerging all the time, and also being able to take advantage of the advances in analytics. And ultimately, what we're enabling our customers to do is to make the most informed and real-time decision on that customer, whether they be a consumer or a business owner. So they're making safe decisions and making appropriate decisions on that customer, whether they're new to the organization or whether they've been an existing customer for some time. So that's really a quick introduction to Provenir, and looking forward to getting into some of the topics that we hope to discuss today.
Thanks, Chris. And that feeds really well into the first question that I'd like to put to all of you. And starting with you, Rishi, we've just been talking about how current standards for lending are outdated. Can you give us an example of how those current assessments of creditworthiness or delivery are not adequately meeting customer need? And obviously, you'll be speaking directly to the student lending space.
Sure. So exactly, I think it really is. It's critical. The tailored approach is critical. In our context, we have individuals who are looking to undertake an MBA or a master's program or some form of professional qualification studies, and what our system does is analyzes what it is you're doing, where you're doing it. We sort of overlay data in terms of earnings trajectory and potential for that industry that you're in, for taking into account the relevant work experience you have, really taking a holistic view, because ultimately in a traditional form where you've got sort of essentially high street banks who I guess previously sort of had this space, but it really wasn't fit for purpose. They're pulling out of sort of consumer lending in the unsecured sense, and what you had was a sort of assessment based on credit scores. Now the problem is when you're typically of an age where you look to undertake postgraduate education, your best earning years are still ahead of you, and often it's shaped by the skills and the education that you have. And then it becomes a vicious circle, which if you can't get there, then how do you progress? And so just looking at a credit score, which is great because it tells you about the history, but it's backward looking. It doesn't tell you about the future. And I think that's where we come in. That's where our approach, as I say, driven through the tech that we have, through a simple kind of application form, allows you to, or allows us to get a holistic view of an individual, which then means that we can factor that into our sort of affordability and creditworthiness, and as I say, look at a future earnings trajectory, and come up with a financing solution and a loan-term proposal that reflects that, and thereby, essentially enabling that education, right? Because we know what the data is in terms of the outcomes, right? So statistically, we know if you go to, in a certain institution, you're doing a certain course, we know what the outcome statistically, as I say, is in terms of time to, the average time it takes to get employed, the average starting salary, and so on. And so we can start to take some of that into account, and thereby kind of make that loan happen, as opposed to sort of say, well, of course you're in your late 20s or your early 30s or mid 20s even, and your credit score is obviously low because, perversely, your credit score only goes up when you take on debt and show you can repay it. But what about those high achievers who are trying to get there? If it's just based on the credit score, then they're not. So that tailored approach is absolutely critical.
Thanks. And I think that notion of, assessments of creditworthiness being backward looking rather than forwards looking is a really interesting one, and how that richer data supports that greater personalization. Martin, you touched a little bit about credit cards and the ways in which perhaps they weren't working for customers. Can you pick up on that same question and tell us a little bit about how you're offering a more personalized and tailored approach to customers?
Yeah, absolutely. Well, I mean, first of all, it makes sense probably to start with a pain point. I think if you look at the UK market today, and you have about 33 million people actively using credit cards, they carry about 70 billion balances in those cards, and that is despite all the innovation we've seen in the checking account market and debit cards, etc. This is just credit cards, and if you think about it, all those people, all those 33 million people, 70 billion balances, if you spoke to those customers, they would tell you they don't have a plan to pay back those balances. It's something that they will figure out, as they move along. They don't have a clear view on how much that borrowing is costing them. Not at all. Nobody can really predict what the cost of borrowing on a credit card really is. And these people feel that they're not doing a smart thing. They're not in control. So I think we can do much better than that, I think, in this day and age. So definitely, I think that the delivery models for revolving credit are completely outdated. And we know, I know from firsthand experience in working with the major banks, which currently they hold, I would say, the vast majority of these balances, is that they do have outdated technology that makes them really hard and difficult to deal with those things. It's not that they don't want to deal with it. It's just it's really hard because of their outdated technology. The product needs to introduce significant changes to help people control the credit better, to have better plans to pay back, to know exactly how much that is costing them. And banks really cannot deliver on that. And so that's where we come in. We created a new installment-based credit card from scratch to be able to do that, to help people individually at the purchase level decide how you're going to pay for those things. We believe that there's some great things about the credit card, and they help you build your credit score. They give you interest-free periods. They give you a bit more security. You don't have to pay for things right now. You can take some time to pay them back. So there are some great things there that I don't think we want to lose, but definitely the lending model is completely outdated. So being able to control at the transaction level, how you want to repay for those things, and the decisions that you make say, on a computer that you just bought, be just about that and not let that influence anything else that you're doing. So you can keep your interest-free buying in some purchases where you take a bit more time and maybe pay interest for individual purchases. You know, I don't see why not a product like a credit card couldn't evolve to be like that and empower more people. So I think in general, you know, beyond what we are doing, I think revolving credit needs to evolve. We've seen people get into difficult situations. Persistent debt is becoming a major issue in the UK, and I think we need to address that. And traditional revolving models don't address that fully, we think. So we can definitely do better.
Thanks for that, Martin. And we'll certainly be picking up on those concerns around indebtedness later in the conversation. Oscar, over to you. And I know Rocket's doing a lot, but can we focus on the lending piece? And you can tell us maybe a little bit about how you've overcome those hurdles of outdated notions of creditworthiness to deliver something better to your customers.
Yeah, I think both Martin and Rishi touch upon things that we are discussing and working hard on at Rocker as well. If we look at Sweden as an example, we traditionally have a lot of data on individuals' financial situation, such as income and debts and things like that. The problem there, of course, is that data can be old, up to 12 months. And people expect us to know how their financial solution looks like right now, not how it looked like 12 months ago. So I think credit checks and all that kind of information is mainly old data. But with the possibilities that we have today with using more real-time data, of course, with the allowance of from the consumers and the users enabled through PSD2, we can use that data to be a lot more flexible, and which pulls down risk both for the lender as such, but also, of course, for the individual. So I think the assessment of creditworthiness is becoming a lot more individual and flexible, and the data to make those decisions upon will be a lot more changing and not so static, meaning that the models will have to reflect that. So with that said, I think the creditworthiness and the strong credit processes are, of course, absolutely key for us. I also feel like a lot of the traditional focus has been on the process up until the loan is paid out. But then what? And that is when it really starts for the consumer. In our case, we have the duration of the loan could be between 3 to 12 years. I mean, a lot of things can happen in your life over that lifespan, and I think for us to work on those changes and be proactive instead of being surprised when things are happening is key. So I think that's where it starts for us. Also, coming back to what Martin said, that working on a transaction level instead, and choosing how to handle each transaction based on the situation and the purchase or whatever the financial situation you're in. I think that is also really important and something that is key for us. So yeah, that's kind of my view on it.
Great. And Chris, obviously you come at this from a slightly different perspective than the other three panelists, but can you tell us a little bit about how you're supporting lenders to make more adequate assessments of creditworthiness than perhaps older models would have allowed?
Yeah, of course. So yeah, from real interesting themes coming out from what Oscar, Rishi and Martin have said is that they talk about simplification, they talk about making decisions based upon the most up-to-date information available, they talk about suitability and affordability. So what Provenir's approach to this really is enabling our customers to leverage whatever data sources they want to consume as part of this decision making. Being able to access that data real time, so you're making the decision at point of transaction or point of application, and then giving them the ability to to changes. And what the last 12 months has certainly shown this industry is that they need to be able to pivot really quickly. And by having flexible tools that enable the strategies and the policies to be adapted to those changes is really key. So that you are making the most appropriate, affordable, and recommendation around products, but also making sure that when you're offering those products, they are suitable at that point in time for that particular customer. And the only way to do that really is to leverage the data that's out there, being able to transform that information to how you want to use it within your decision-making strategies, and then being able to leverage, like I said earlier, around the analytics that you need to ultimately make the appropriate compliant decision at that point in that customer's requirements at that point in time, and being able to then effectively manage that facility and making sure that it stays appropriate and affordable for the customer.
Thanks for that, Chris. That really pulled together nicely a lot of the issues that the other panelists address. Back to you, Rishi. I mean, you're in the student lending space, which is interesting because it's not one that we often associate with innovation, and certainly in the UK market. And anyone who's the parent of university-age children just typically thinks down one route. Can you tell us a little bit about what you're doing to, and how what you offer creates a better experience, better product, a better outcome for the customers you're targeting?
Sure. So you make a valid point there, in terms of it not being necessarily the most obvious thing. But, part of this is that there is a funding gap, and that's kind of the macro story behind Lendwise, I guess, that in the UK, you do get a government loan, but what we find is that it's not enough, and that's where we come in. And in some cases you're not eligible, in which case, again, where do you turn to? In terms of, I touched on how we do things differently in that it's a personalized approach, because we holistically look at an individual and come up with a sort of financing solution that's tailored to them and their circumstances, and as we see it, the outcomes that they are likely to achieve based on what they're studying. But in addition to that, I mean, the entire process is obviously online. You can manage the entire, the repayments, all sort of effectively through the online portal. So that also, I think we find that needs to be delivered in a way that can be easily understood. And it's interesting how, so much of the legacy channels just don't do that. The other thing that we think is very important is taking into account the individuals that we're dealing with, and at the particular age range, not everybody is as financially savvy. So as those who have studied finance might be. And so again, it's very important that customers are things are transparent and clear, and so to make to individuals, and how the product works. We have features that essentially make our loan quite student friendly, and that's, again, I guess one of our USPs is that it's not just a loan, it's a student loan that's student friendly. Apart from being very competitive, and we have the lowest rates for what we do, but also, for example, you can repay your loan early without any penalties or any charges. Now, that's very, very important to us, because what we're doing, coming back to our mission statement and the genesis of Lendwise, is we are enabling that access to education. So it's not about hooking someone on with debt and then not being able to, or and then not being able to get out of it when things, when they graduate and go into employment. And these are, you know, ambitious individuals, of course, who are looking to study further to get ahead. You know, once they have the ability to repay their loan in bigger chunks, you know, make early repayments, make over repayments, you know, that's not the point at which you penalize them for that. That's the point at which, you know, essentially they need to be rewarded. So because the plan essentially is working. So that's one of the key features that we have. Again, our another one is that our interest rates are fixed, which means that you know exactly what you have to budget for every month when your repayments do start. And I've just touched on the other key element is that you know we allow you to focus on your studies when you're studying. So no repayments while you're studying. So you know these are some of the aspects that make our sort of product, you know, not just a standard product, but you know very much tailored to the context of education finance, and obviously you know things like the interest rate and the term of the loan are tailored to the individual.
Thanks for that, Rishi. And you touched on the notion of indebtedness, and Martin, you mentioned this in your comments. When we think about traditional credit cards, and also, you know, kind of the ways in which all of you are either supporting or enabling more lending to more that opportunity to borrow. What about concerns around over indebtedness and the proliferation of products? You know, how do you protect your customers against taking on too much debt and supporting them?
Yeah, it's a great question. Great question. I think it all starts at the beginning by helping people make better decisions when they buy, when they spend. And that is give them the tools to know that if they were to use financing, how much that would that cost at the moment of purchase, and not something that they decide afterwards. So people tend to not bring in the cost of financing at the moment of purchase when they use traditional credit cards. People tend to, oh, it's going to clear my credit line, fine, I'll just buy it, I'll figure it out later. A section of those people unfortunately decide to make minimum payments because it's easy, and then all of a sudden realize that, oh, I'm paying a lot more interest than I thought I would. So I think the problem starts earlier, is not after the fact, is before the fact. Is if you are making decisions on what to buy, you know, your boiler breaks down, you need to choose a boiler or whatever it is that happened, you are able to decide whether, well, I can meet certain payments at a certain cost, and that's something that I can safely do. So empower people with better information at the moment of purchase so they can make better decisions. I think it's a key component. So that's one. Then the second is you need the delivery of credit, the way you service it to people. I think it needs to empower them to be able to meet the payments and run with the lending without having to fall into problems like persistent debt. Meaning, if you can get people on a straight amortization plan for whatever particular purchase, and there's a very clear interest schedule, and there is a clear principal amortization plan, so people will never actually be in a situation where they're paying more interest than principal, which is what happens sometimes in revolving models. So by helping people access that type of, we call it better lending, we can help people stay out of trouble. Now, traditionally, that type of term loan lending has been available in high ticket personal loans or student loans and that sort of thing, and that is fantastic. But then when you go into more the consumer world, more the credit card world, where people are just making also not just big purchases but small purchases, and they go into the tube, they buy lunches, and they go in a holiday, and all of that, it becomes really complex. How do you bring that model, all those benefits, into that model? And I think that needs to be enabled with technology to be able to service that credit better. So I think that's the second element, helping people service those loans in a way that is going to get them out of trouble because of the transparency and the control, and also flexibility. I think Rishi just touched on something really interesting, which is allow people to flex their lending when things in their financial situations change, and do that easily without penalties. I think that's critical. And if I look at the lending models of the future, if you like, I think that needs to be part of it. Our financial lives are not static; they do change. Sometimes we need more time. Sometimes we need less time. So models that allow to do that without having to incur in penalties or call customer service to be able to do that, because again, if you put frictions on it, people are just not going to use it. So how do we just deliver those benefits to the user in an easy way, in a friendly way? I think that's the challenge that we are trying to address, at least at Tymit.
Thanks for that, Martin. And Oscar, how would you think about protecting customers when we think about that proliferation of lending products, and picking up on some of the ideas that Martin shared? What steps would you take to protect your customers from that threat of over-indebtedness and future financial difficulty?
Yeah, sure. First, I just wanted to continue what Martin introduced there as well, and I think Rishi said as well, regarding flexibility, because that's something that is really, really key for us. And as been mentioned, a lot can happen within the lifetime of a loan. As mentioned, our loans are typically between like 3 to 12 years, and in midlife, things are happening. So I think being able to handle life as part of your handling of the loan is crucial. So I mean, getting salary increases or bonuses or things like that positively affect your financial situation, of course, gives you the possibility to increase your monthly cost to pay off your loan faster, or pay extra, like an extra installment, and do that, of course, directly from the app at any time, instantly. That is something that we are providing, have been providing for a long time, of course, without any additional fees or anything like that. On the similar hand, if there are things that have changed for the worse, and you need money elsewhere for a while, and it's possible, of course, to decrease the monthly costs as part of the app, or even if you have shown good behavior before, you can use the payment-free periods. If you paid your repayments on time for a while, you're able to use the money elsewhere for this specific month, and use the payment-free month directly from the app. Of course, when it comes to transparency, to be able to calculate or see and calculate the current debt, the current balance per a specific date, so if I pay back the loan at that current date, what will be the total amount. Of course, no fees added or anything like that for terminating a loan in advance. And of course, if like you have your loan is for renovating your house or apartment or anything like that, and if it becomes more expensive than anticipated, of course, there's a possibility to top up your loan as well, as part of the experience on our side. And coming back to the taking on too much debt and things like that. Of course, like the financial health, and that is a growing issue, and there's no aim whatsoever from our side to offer loans or credits to people who shouldn't take them. It's bad for everyone and for the society, of course. And we've seen in the Nordics countries already introducing national debt registers to harmonize, and I think that could be one way to go, taken within the EU, to introduce such national debt registers. We haven't seen that in Sweden though, but I think we will come there, and would help the lender to get a full overview of the individual's situation. I think one thing that has been important for us as well, we have during this pandemic year, we have as part of a loan, like 80% of our loan customers also have a PPI, a payment protection insurance, connected to it. And you can argue that in good years that you don't need that, but it's really shown, like in this year, the worth when things are happening dramatically changed in personal finances life, with income significantly changed for the worse, or people losing jobs and things like that, and our insurance helping out both the individuals and ourselves when it comes to handling that. we've seen that it's been really great, and also been able actually to improve the terms during this year of pandemic to include and improve and even to get it even better without adding extra premium or worsening the terms or anything like that. So yeah, I think those are really interesting additions in addition to working hard with the credit allowance and credit worthiness that we talked about earlier, which is important, of course, until the loan is paid out. So yeah, that's kind of my take on this.
Thanks for that, Oscar. And PPI will certainly ring a bell with many in the UK market. Over to you, Chris, and thinking about what your fellow panelists have just said about protecting their customers from the threat of over indebtedness. How does what Provenir offers support that decision making and that customer support?
Yeah, I think technology has been mentioned quite a lot throughout today's session, and I think that's where Provenir really comes in and supports organisations in that way. In that, there's a real requirement, certainly from a regulatory perspective, that lenders and banks treat their customers fairly and make sure that they're using the appropriate products and services to meet their financial needs. And I think Martin mentioned earlier that the more traditional lenders really struggle to adapt to those changes, and I think what we're really proud of here is at Provenir is that we're helping organisations offer those choices around products when they're suitable and appropriate for those customers. Really around some of the themes that have come out today around accessing data, leveraging analytics, using real-time information. So the product is appropriate, the pricing is appropriate, so ultimately that customer can afford the services that they're looking to access at that point in their circumstances. I think there's something came out from the regulator here in the UK yesterday or today, where recent set of analysis mentioned up to 27 million consumers here in the UK are showing signs of financial distress. So, not having resilience in the marketplace is a real worry for everybody, especially at this time, at the times we're in. So there's a real I suppose there's an imperative really that financial services organisations are making sure that those products and how they're priced for those customers are super appropriate. And I think technology really sits at the centre of that, where we can help organisations make those appropriate offers that are suitable to that customer's circumstances.
Thanks for that, Chris. And you brought up some really important issues there around the personal financial crises that are following on from a health crisis. And as your fellow panelists point out, the life of a loan is long and a lot can change. And as we only have a few minutes left, I'd like each of you to quickly say what you think as responsible lenders, what you can do to help people who, following on from this health crisis, will inevitably find themselves, a number of them, in financially difficult situations. And Rishi, can we start with you, please?
Sure. So yeah, in conclusion, I mean, I'd say, this is, we're in the age of tailored finance, and that's about, essentially putting the control back to the consumer. And I think the companies that will really win are those that partner with their customers and the end user. They, partnering with them, and so touching on that theme that an individual goes through events and if you have a loan alongside that, then that goes through, and therefore that partnership needs to be there. So the onus is therefore on providers, companies like ours, to be responsible lenders. I mean, here in the UK, we're members of something called responsible finance, and so responsible lending is something that is, baked into the culture of Lendwise, and it's very important that that everybody operates at that sort of same notion, because ultimately, and that comes into economic models as well as to how these firms operate. And I think if everyone plays their part, and you're truly partnering with the consumer, then the outcome is good for everybody, and that's the way forward. And that also involves providing the consumer with, as I mentioned, the transparency and the tools to be able to make that decision.
Martin, over to you. How can you act as responsible lenders and picking up on what Rishi says, partner with your customers?
Yeah, well, I think in a summary, what I would say is that it's not enough to just focus on better access and affordability at the moment where people get a loan or people enter debt. That's very important, and I think there's been so much progress in that part, in that element of the value chain. I think what we do is focus a lot more, not just on that, but also a lot on the delivery of the credit. So it's about empowering the user to be able to adjust their situation, make right decisions, to stay out of problems, and understand really how to tailor those balances, that borrowing to their financial situation. For example, now we're in the midst of a pandemic. Obviously, the conditions are very, very different. So having the ability to adjust whatever decisions you made in the past to what you're experiencing today, it's very critical. So I think that's where we are putting a lot of effort, empowering more the customer through technology to be able to make better decisions at the moment of purchase, after a purchase was made. I think that's something that we will hopefully will make a difference in helping people stay out of trouble.
Thanks, Martin. And Oscar, I know you touched on some initiatives in the Nordics, but what do you think you can do as a responsible lender to support customers who find themselves in financial difficulty?
Yeah, I think we touched upon it in different ways, but I think from our point of view, like offering the complete overview, getting the customer in control, being transparent, collecting everything into one place, having the flexibility there. We also work with, of course, like total availability, so offering like 24/7 services around the year, which has been really which we have really received great feedback on, which also helps with that. Whenever there's any questions, we are there to help in many of the channels. And I think from my point of view, like to wrap up for today, I think we've the up-to-date data and use that real-time data instead of looking at historical data, and using the PSD2 enabling there. I think we've only seen the beginning there, and we work a lot with how we can make better experiences based on that, and of course helping customers to not get into any troubles whatsoever there. I think also what Rishi mentioned is really important, like the forward-looking things, future income patterns and things like that. How will this individual evolve in the future? And then coming back to this, working with the lifetime of a loan and everything that can happen there is really key for us. I mentioned the flexibility features and everything around that. I think we will see even more of that and helping out. And from our point of view, also working with really great like third parties, providing great services within these areas that we could put into as part of our services to provide an even better like holistic experience to our customer. I think that's really key for us also to find those third parties that we can cooperate with and put as part of our services. So I think those are some of the things in addition to the things that I mentioned earlier.
Thanks, Oscar. And Chris, the final word is with you. Any closing thoughts on the steps that a responsible lender needs to take, and obviously the steps that you can take as an organization that supports that lending?
Yeah, I think sort of to wrap up for me, it's about making sure what we're doing is helping lenders really make the appropriate product offers at point of onboarding, but also making sure that they're leveraging and accessing the appropriate data at the appropriate time, leveraging analytics to ensure that those products continue to be suitable, and that enabling that real-time customer insight throughout that customer life cycle, and again making sure that as they continue to support that customer and serve that customer, that the products and how they're priced are appropriate for their circumstances.
Thanks for that, Chris. And we're unfortunately at the end of our time. This conversation's gone much quicker than I thought it would, and we didn't even get to all of the things we wanted to discuss. But if you do have questions for our panelists, and thanks again to Rishi, Martin, Oscar, and Chris, please post them in the chat. You can also look them up on the People's tab and message them directly. I'm sure they'd be more than happy to respond. But for now, thank you again to the panel. For everyone watching, please stay on the main stage, because next up we'll have a session exploring mortgages supported and powered by digital. So thanks again, everyone.